Hello to all the Web3 enthusiasts out there. This is Marc speaking, and welcome to the new exciting episode from Synopsis. So I hope that the new year 2026 started off great for all of you guys. Everyone is safe and get back to business. And new year starts with a new guest. So please welcome Marc Liew, the head of APAC region at Jito Foundation. Hi, Marc. How are you today?
Hi, Max. Thanks for having me and having Gito, and Happy New Year to you and your audience as well.
Yeah, thank you. And starting off this year with like untypical, I would say, type of discussion because I would say even a year ago, it was very hard to ask our guests to answer at least one question about regulation. And today's discussion will be devoted, I would say, 60-70% to it. And it's going to be hot and insightful. So hope everyone stays with us till the end, not to miss the real alpha from the expert. And yeah, Marc, if you don't mind, we have really a lot of questions and a lot of things to discuss. So let's get straight to the action.
Sounds good.
Since it's the first time here at Synopsis, let's start with the introduction. Could you please tell us what is your role in the Gito team and what did you work on before joining in?
Yeah, thanks, Max. So I joined Jito about 5 months ago as the head of APAC. Before Jito, I spent close to a decade in the Web3 space with firms like R3 and Ripple, mainly working on institutional DeFi, helping regulators, institutional clients understand what's blockchain, what's cryptocurrency, and what are some of the use cases that we can help them build and deploy on chain. And I was pretty much helping R3 build the ecosystem, working with regulators across use cases like trade financing, CBDCs, digital currencies. And if you remember, a few cycles before this, when regulators and institutional.
As you spent years at Triple and R3, and as you said, working directly with regulated institutions on stablecoins, CBDCs, and tokenized assets, the question is from that vantage point, what actually worked in those early institutional blockchain experiments and what clearly didn't?
Yeah. Um, those were a really good opportunity to really be in the room with decision makers that's actually shaping national policy around blockchain and cryptocurrency. And what we actually observe is that during that decision-making process, right, they are actually looking at key factors where, whether it is actually investor protection, KYC, AML, compliance, how are those assets getting custodized, right? The decision-making process between, say, a regulator and an institutional clients are very different. So from the regulation point of view, they don't really care about, the speed of transactions or how much lower is the fee, right? They care a lot about investor protection. Say using stablecoin as an example, right? So you tell them about reserves, and then they will ask you in terms of reserves custody, like where are you parking those reserves, and how are those reserves being handled during the redemption cycle whenever a stable coin is actually getting burned, for example. And whereas if you're talking to an institutional clients, they're always thinking about what's the margin, what's the profit, whether this is going to be helping me to save costs or this is going to be a new revenue stream. So on a high level, I would say this is the differences between how a regulator make decision and how an institutional client approach blockchain innovation.
Okay, got it. And although it was like a few years ago, this might be still called pilot heavy era. Could you please tell us how different does the current phase of institutional crypto adoption feel compared to those times several years ago?
Yeah, absolutely. So you're absolutely right when you use the word POC era. So a few cycles before this, institutionals and regulators, they are definitely on the fence in terms of going head on into blockchain and cryptocurrency. So most of the use cases, I use CBDC as an example, right? Most of them actually experiment a growing phase of understanding the use cases and trying to actually pilot few use cases within a selected group of stakeholders. Having said that, and I think the biggest turning point of how the whole industry actually went from piloting and POC into real deployment is when BlackRock actually launched the first Bitcoin ETF back in January 2024. And I still remember that is such a pivotal moment because once BlackRock actually launched the first Bitcoin ETF, suddenly all of the institutional clients started taking the asset class very seriously because an ETF product is very different than just creating like a CBDC or a tokenized RWA, right? Because if you are tokenizing something on chain, you are talking about bringing a traditional asset on chain, right? You need to think about all the technicalities. You need to figure out like wallet addresses. You need to figure out which blockchain to use. And once you jump through all the technical hoops, you still need to actually figure out the liquidity portion of the game. Like where is the liquidity going to come from? There's a whole bunch of convincing to do. And then on the other end of the spectrum, if you look at ETF, essentially it's a very good product to open up crypto to traditional investors, right? Suddenly, BlackRock offer Bitcoin ETF as a product. So all of BlackRock's investors that has a BlackRock account, suddenly they can actually access this cryptocurrency product overnight with little to no friction. So if you think about it, it's such a good way, ETF as a product, to bring crypto to the mass market. And that has actually opened up a lot of doors for institutions to really actively look into cryptocurrency. So after the Bitcoin ETF, I still remember, followed very closely with Ethereum ETF. And of course, the past 6 months, we are seeing a lot of issuers that launch Solana ETF, which, we were also very fortunate to be able to be in a position to speak to these issuers as Jito Sol, as a liquid staking token, play a very important role in some of these ETF conversation as well. Yeah.
Awesome. So pretty detailed. Thanks for sharing. And we'll speak about Solana for sure today. And this was about the time frame, the era comparison. And what about the regions? So from Singapore to Hong Kong to emerging APAC markets, how do institutions think about blockchain adoption differently than in the US?
Yeah. That's a very good question, and I always enjoy sharing my views, on the region because when it comes to APAC, it is not a singular market. For example, the US is really big. You have a very big addressable market, 250 million population, and then it's very easy to actually launch a product, especially if you're a startup. Launch a product, find a product market fit, and then you can scale very quickly. But APAC is actually very different because you need very localized approach for each and every single individual country in APAC. And the best thing about it is when you look at regulations in US and the regulation landscape in APAC is very fragmented, right? Singapore and Hong Kong, the way they regulate digital assets might be different than how things are actually being done, say, in Indonesia or Malaysia or Thailand. But having said that, key economies in Asia is actually making a huge development into regulating digital assets. Say, for example, Singapore, Hong Kong, Japan, Korea, UAE, they all have very clear regulatory frameworks for digital assets. Some countries, they have very clear framework for stablecoin regulations as well. And we are actually seeing APAC itself developing in such a fast pace is because some developing nations in Asia, they are actually in fact using blockchain technology to leapfrog some of this technology. Say, for example, right, stable coins, as one of the best product market fit that actually came out of the space over the past 2 years, I say. A lot of these developing nations in Asia, previously, they don't have access to a bank account. And a lot of these Asians, in fact, work in Europe or in US. But for them to actually send money home, they need to actually rely on traditional banking rails, right? The SWIFT of the world, the commercial banks of the world, where your money don't arrive after 3 or 5 days, and then they charge you quite a hefty sum of money. But with blockchain technology and stablecoin, right now, not only they can work overseas, to earn US dollar, but they can actually receive their salary directly in US dollar stablecoin. And within that same day, they can send the money in stablecoin back to their families, in Asia, right? So that is actually a very important use case of how cryptocurrency is blending into the daily life. And if you ask me, that is actually a good thing, because when technology gets boring, that's when real scalability happens, because it is so easy to use. There's very minimal friction. So if we look at how the stablecoin game is actually developing and we apply it to what's happening with Jito and Solana, we're actually seeing a lot of payments use cases currently being deployed on the Solana blockchain, because that, it is safe, it is fast, it is cheap. These are some of the key requirements for institutions when they want to actually look at deploying onto blockchain. And most importantly for Jito, we are helping to actually build and engineer an end-to-end revenue infrastructure that converts every millisecond of block space into yield. So we power 93% of Solana validators and capture the value life cycle through the largest liquid staking protocol with about 2 billion TVL. We are essentially building the core revenue infrastructure that institutions need to participate in crypto. Yeah.
Wow, sounds awesome. And I would say that money transfers and payments in crypto is the basic and the most important aspect and the use case. And it's a real pleasure to hear that this actually utility of crypto is penetrating the markets and our everyday life. And you are doing a great contribution for this and for the entire mass adoption. So my respect for that. And a little bit more about the Asian realities. Could you please tell us if the clearer regulatory frameworks in Asia actually make institutions more willing to deploy capital on chain?
Yeah. So, I mean, using ETF as an example, right? Since we mentioned ETF at the beginning. So we are seeing a lot of the US issuers launching and filing Solana ETF. And then in Asia itself, we are also seeing Hong Kong-based issuers, for example, like China AMC, who has actually recently launched, in fact, the first Solana ETF in the world. And that has actually gained a lot of momentum. We are also seeing similar conversations taking place in other markets within Asia as well, because issuers understand that, for example, ETF as a product, it is well regulated, right? And by uh, launching a crypto-based ETF, we can essentially open up the opportunity for the retail market and the institutional market to access and have direct exposure to crypto directly. So within Asia's context, I say stablecoin as a payments use case is very hot right now. For the obvious reasons that you just pointed out, because of the cross-border latency and all the layers of inefficiencies that happen over the years. So stablecoins as a payments use case, you're seeing a lot of payments company innovating with stablecoins. And then from an institutional lens perspective, we are seeing a lot of institutions looking at, okay, I can actually use stablecoins to lower my costs when it comes to doing cross-border payments and improving their efficiency. I can pass the cost back to my customers. I don't have to charge them so high a fee to retain the customer, right? So what's next for me in crypto? How do I actually participate? So a lot of these conversations that we're having with institutions is that, especially for example, like digital assets treasury, the DATS company, they are looking beyond just holding cryptocurrency as a speculative tool, right? Because if you are an institution, you have to understand you you need your board approval to deploy capital to buy into cryptocurrency, right? And you can't just tell them we are buying this cryptocurrency as an asset because there's a store of value. You need a stronger narrative. Now, this is where actually Jito comes in. So Jito actually we call ourselves the revenue engine for Solana. There's a few components that we work on building for the Solana ecosystem, and it's also very well applicable for institutional investors. So if you're familiar with the whole blockchain space, right? Solana essentially is the world's most powerful decentralized computer, right? So Jito, we are actually building the high performance engine that powers this computer when it comes to the revenue perspective. So we have the first element is called Block Assembly Marketplace. In short, it's called BAM. So before BAM, transaction ordering was a black box on Solana. So trading bots spam the network with millions of failed transactions trying to land a trade. This essentially clogs up the chain and then degrade the user experience. So BAM actually changes the narrative by introducing a decentralized, verifiable marketplace for block construction. So we bring unprecedented transparency, privacy, and flexibility to the network. So BAM is the transaction scheduling system for Solana. So using trusted execution environments, BAM ensures that transaction scheduling is private and verifiable. So this isn't just about speed, it's about integrity. So traders bid to have their bundles included. Transactions remain private until they are executed. So front running cannot take place, right? So this is actually very important. So it gives institutional investors a vote of confidence in terms of understanding that, hey, the Solana blockchain is truly decentralized and is reliable because of this feature, right? Now, second of all, we have a product called SigNet, right? So SigNet essentially powers the decentralized heartbeat for the revenue engine. So under SigNet's steward program, it autonomously managed validator sets based on transparent on-chain history. So we actually remove the human element. What does it mean? SigNet ensures that every time a new sig comes in, it's always automatically distributed to the most efficient, highest performing validators. So if I actually translate that to my institutional clients or investors, right? Through the decentralization of its stake pool management, Jito removes the centralized issuer risk. Because if you are a bank, if you are a regulator, you want to take part in cryptocurrency, you don't want to be building on something that's controlled by a singular party, right? This is how we prove that this SigNet is autonomous. Even though Jito goes away one day, the SigNet will still run on its own and is fully decentralized. This is the reason why, the next product, Jito Soul, is so well received by global institutions, right? So we talk about BAM, we talk about SigNet. Now let's go to Jito Soul. So if BAM is the engine, then Jito Soul is the high octane rocket fuel. We make this revenue, we make all the revenue that's actually produced on the Solana blockchain accessible to the world. So in the past, right, you had to choose between staking. You are just staking, locking up your Solana, getting new, but you can't do anything with your Solana, right? Does it sound familiar? This is just like your bank deposit. You put in money with your bank, your bank promised you a 4% interest rate, but the condition is you can't take out your money. If you take out your money, you lose that 4%. Now with Jito Soul, we solve both of these issues. So you can have your cake and you can actually eat it. Because Jito Soul is more than just a liquid staking token, it is a continuously compounding total return product. So it captures the validator rewards, the MBV tips from BAM, and the network growth, all wrapped into a single liquid token. So you can actually stake into Jito Soul, and then you can earn the APY. At the same time, you can also put your Jito Soul to work where a lot of these DeFi protocols accept Jito Soul as collateral, and then you can deploy your capital further for liquidity generation. So this is super awesome. You can have an asset that appreciates over time, compounds interest over time within a singular token, and at the same time allows you to actually deploy into other liquidity generation event. From an institutional perspective, earlier I also mentioned that most of the ETF issuers, they actually include Jito Soul within their ETF filing because When you are an ETF issuer, let's just say if you launch a Solana ETF, right? Your institutional investors invest into this product, but there's always going to be investors that want to redeem the product. So when they redeem the product, they send you the stake, so you have to actually give them cash. Now the problem is unstaking will take some time, right? So in Ethereum land, obviously we are talking about more than 40 days. On Solana, it's much better because we're talking about 2 epochs, but you still need 3 to 5 days. So what these issuers do, they include Jito Sol, a percentage of their ETF is actually parked under Jito Sol. So whenever there's redemption requests from their institutional investors, they can actually easily sell the Jito Sol and provide liquidity for their investors. And this is a very good operational mechanism for most of the ETF issuers partners that we are currently working with. And also, fun fact, Jito also has also been clarified by the SEC that it is not a security. So this is also why a lot of these issuers are so open to have the conversation and try to innovate and offer new financial products around Jito. So yeah.
Wow, extremely detailed, I would say, but you managed to keep it all in order. So must be clear for everyone. So I see that we came up with a right question for you. And you even managed to answer, I would say, my next question. So let's skip it and move on to the motivation of institutional investors, which is behind all of this initiative. So could you please tell us if it is about yield, capital efficiency, operational simplicity, or something deeper in how institutions want exposure to networks like Solana?
Yeah, absolutely. So um, when institutions think about deploying capital into crypto, right? So there's a few narrative they can explore. So obviously, Bitcoin has always been the store of value, right? Yes, the store of value narrative is really strong, but you also have to understand that beyond the store of value, there isn't a lot of use cases that's actually tied to the Bitcoin protocol. But Solana is actually very different. So Solana essentially is the internet capital markets. So the goal here is, especially what we do every day at Gito, is actually to make Solana the best blockchain possible, that every singular asset classes are deployed and transacted on Solana, right? So from an institutional investor's perspective, they want to participate in this economy, right? The Web3 and decentralized economy. Essentially, we are rebuilding this from the ground up. But how do they do it? Yes, they can deploy capital and buy, so hopefully that it will appreciate, or some of the investors and institutional clients that we work with, they actually stick into Jito because Jito essentially tracks directly to Solana. It's a liquid staking token. It actually gives them the benefit of the appreciation of the Solana token, but at the same time, it's a vessel to capture all of the MEV and network fees that happen on Solana. So if you think about Solana as a blockchain for the future, all the activities on Solana is just going to increase over time, right? The more activities and the more assets getting deployed and transacted on Solana will lead to more network fees and MEV fees being generated. And all these will be encapsulated and redistributed to all the investors in the form of yield via Jito. So we essentially not only build the infrastructure layer via BAM, but also we provide a vehicle for the institutional investors to be able to actually tap into the yield potential on the blockchain. So this actually translates really well for institutional investors, especially for their portfolio managers. Suddenly, their portfolio managers, they have a new narrative that they can speak to their board about, investing into blockchain technology, right? Because they are not just speculating the asset anymore. They are telling the board all these yields are actually generated from actual commercial activities that happen on the blockchain. These are network fees that people pay to land transactions, and we are actually earning, those yield and passing it back to them. So this narrative is really strong, and we hope that there will be more institutions getting more exposures and educations on this, and then we hope to be able to work with more institutions and helping to build Solana as a self-sustaining economic model. Yeah.
Wow, sounds great. And we're now one step closer to understanding the motivation of institutionals. And
Yeah.
we're moving on to the next small block of questions. So you worked across payment infrastructure, stablecoins, and now DeFi native staking. Are we seeing payments rails and on-chain financial products converge into a single stack in Asia?
Hmm. Yeah, that's a very interesting question. Um, I think the convergence will come in the future, but not overnight, right? Because if we try to unpack that, payments is a very, very broad industry. So at this stage, what we are actually seeing is that the good thing about it is there's a product market fit in the form of stablecoins. So you will see a general theme emerging, which is payments network deploying on a blockchain and launching their own stablecoin. This will be a very common theme within the payment space, at least for the next, I say, 12 months. Because there's friendly regulations, regulators and policymakers, they have actually gone through enough education and are very comfortable with innovating with stablecoin. So this will definitely be the case, at least for the next 12 months. This will actually mean more payment use cases, whether it's retail payments, commercial banking payments, or large cross-border trade financing payments happening or being deployed on blockchain, right? So this is what's happening at least for the next 12 to 20 months. So and just to do this, it is not there's no small feat because you're talking about moving away from a lot of inefficient traditional banking and payment rails and moving them onto blockchain. So there needs to be a lot of motivation to do so. But thankfully, there's already a product market fit. So once that happens, it will actually solidify the crypto industry. Because if you think about it, everything that we do, whether it is in the Web2 world or the Web3 world, you can't run away from payments. You need to pay for everything and anything, right? So let's just fix the payments part. It will be the cornerstone to help to actually um, encourage the cryptocurrency to evolve into the next phase of more use cases. So that the payment side of things is actually happening. So while it's actually maturing, you see a lot of progressive innovators, especially the institutional clients and high net worth individual, start thinking about yield bearing product. This is where product like Jito will come in play. Because when it comes to yield bearing, it's the no-go land for stable coins and for payments use case at this moment, right? You see all the stablecoin issuers, they are issuing, but they are not sharing yield with you, right? So even if you hold your stablecoin, most of the issuers, they don't give up 100% of the yield to you, right? Because, there's regulations around how do you actually handle the reserve, and there's regulation around how do you actually make redemption happen, etc. So since yield is a no-go zone for stablecoin, where is the next place to go for yield? The best place to look at it is how do we actually tap into the economic activity on the blockchain and find a mechanism to actually extract those economic activity and translate them into yield. So a product like Jito is well positioned to be able to actually help institutions to understand that path forward.
Awesome. And also a brief question in addition to what has been just discussed. So what does this convergence unlock for institutions that traditional finance still struggles to offer?
Yeah. So obviously there's a few things that's been unlocked already, right? If you look at blockchain and cryptocurrency as a whole. So obviously payments use cases, stable coins, they are already unlocking a lot of these idle capital that's actually sitting, within those cross-border rails. It's getting unlocked because payments right now can happen T+0 with stablecoins. So the capital that was actually previously parked, in the corresponding bank account can now be deployed to use for other things, right? Similarly, for new product like Jito, um, we are working very hard with institutions, with exchanges, and with prime brokers to make Jito a pristine collateral for trading. So, that was a point that I mentioned earlier. By having Jito, you get to actually enjoy the appreciation of a SOL token, within the Jito vessel. But at the same time, you can use it as collateral to actually deploy into DeFi use cases. So similarly, we are working with exchanges and institutions to talk to them. How do they unlock further capital efficiencies for their investors, where they can start accepting Jito, for margins, for trading opportunities. So this is also one big area that we're looking at, because if you are institutions, you're always thinking about how can you actually meet the demand of your investors. And investors are always very very optimistic when it comes to looking for opportunities, and they are always asking for, like, is there an opportunity for better credit, better margin? And we are trying to position Jito as a pristine collateral that institutions are comfortable with, with working with investors. So that's also one area that we're looking at.
Got it. Awesome. And well, we so so quickly we came up to the final part of today's discussion, as I expected, and as I said in the very beginning, it was really full with insights, and the time flew so fast. But let's finish it up with addressing directly to builders and investors listening to us right now. Could you please tell us where should they be paying attention before the headlines catch up in the 2026, I would say?
Mm, yeah. So there's always, I mean, I wish I have a crystal ball. And but if I have to actually just pick a few areas in terms of looking ahead, what's important and how that space is going to develop, I say one thing stand out is definitely there's going to be a lot of hot money coming in from the institutional space. So institutions right now, they are very comfortable with cryptocurrency technology. They know under the hood, and all the specs within the blockchain space, right? They've spent the past few cycles studying the industry. So look at use cases and try to understand, right, whether those use cases have the right product market fit. I think within this industry, I'm sure you are also very familiar. There's a lot of facts, right? There's a lot of use cases. People just try to actually run some promotions and try to make some noise about certain products and all that. But try to focus on the actual use cases that actually deliver values. That's really important, right? And the best way I look at it is, like, for example, what we're doing here at Jito, right? Every day we are building the right infrastructure to improve the user experience on Solana, so that people can actually build on Solana faster, cheaper, and easier. And in doing so, we help to actually capture all the network fees and package them and redistribute it back to the believers that stake into Solana. So, that is a really good and strong proposition that we're helping the Solana ecosystem achieve. Essentially, we're building the end-to-end revenue infrastructure for any institutions that want to actually get involved within the space. So using that as an example, so for anyone who is actually looking into this industry, try to look beyond the noise, beyond the hype, and try to focus on actual use cases that actually delivers values at the end of the day.
Wow. An awesome ending. Actually, nothing to add here, but to express my respect once again for your contribution that you do, not just for Solana believers, but for the entire industry. That's really cool. And yeah, thank you very much, Marc, for joining in. It was really interesting to know your vision, to get these insights. And I believe there is so much more to be discussed. So hope to see you in more episodes.
Yeah, likewise, the pleasure is all mine. And thanks for having me and having Gito today. Thank you so much, Max. Thank you.
Yeah, thank you. And thanks also for our audience for watching till the end. Guys, stay safe, listen to advice of Marc, and yeah, see you in more episodes. Bye bye, everyone.
Bye, Max.